Hey everyone, welcome back to Corporate Decoder, the place where we decode the nitty-gritty of corporate America. And trust me, this latest filing has some juicy tidbits that will make you go wow, or maybe even oops. Today we are diving deep into NBT BANCORP Incorporated latest annual report, a company that has been around for ages providing financial services mainly in the New York area and beyond. So right off the bat, we see a company with about $16 billion in assets as of the 31st of December 2025, pretty hefty. That is like the combined pocket money of a small country. Now let's talk money straight up for 2025 NBT BANCORP, raked in a cool $169.2 million in profit. That is a nice jump from the $140.6 million they made in 2024, showing they are growing. But hold on, they also talk about something called operating net income, a fancy way of saying profit before some special stuff. And in 2025, that number was even higher at $194.5 million. This hints that the company might be trying to present a more consistently strong picture of its core business. A big piece of their 2025 story is the acquisition of Evans Bancorp Inc. This was a major move that significantly boosted NBT Bancorp's presence in Western New York. They issued about 5.1 million shares of stock for this deal, making it a pretty substantial acquisition. Looking at how they make money, their net interest income, that is the difference between what they earn on loans and securities and what they pay on deposits, jumped up by a massive 25.3% to over $500 million in 2025. This is a huge win, showing they are successfully navigating the interest rate environment. Their net interest margin, which is a key indicator of how profitably they are managing their interest. Earning assets and liabilities also saw a healthy increase. You can see it here at 3.59%. This shows they are doing a great job of keeping their funding costs in check while earning well on their loans. Their loan portfolio grew significantly to $11.6 billion. That is a 16.3% increase, and a big chunk of that comes from the Evans acquisition. This tells us they are expanding their lending activities. Now, for a crucial part, the allowance for credit losses, this is the money they set aside to cover potential loan. Defaults, it went up to $138 million. This increase is mainly due to setting aside reserves for the newly acquired Evans loans, and also because economic forecasts suggest a slightly tougher road ahead for borrowers. This is a sign of caution, but also good financial management. Tying into that, the provision for loan losses, the actual expense for potential loan losses, also increased. That is common after an acquisition and also reflects those economic forecasts. We saw a $13 million increase attributed to the Evans acquisition alone. But as expenses go, things got a bit pricier. Total non-interest expense shot up by almost 18% to $445 million. A big chunk of that is due to the Evans acquisition integration costs, coupled with higher salaries and technology investments. This is a trade-off for growth. Of course, being a bank means being heavily regulated, and NBT Bancorp is no exception. They mention federal and state laws, consumer protection rules, and the like, which can impact their business. They are particularly mindful of the CFPB rules, as their assets have grown past $10 billion. Speaking of that $10 billion mark, well, they've crossed it now, and that means more regulatory hoops to jump through. This means more compliance costs and procedures, which can eat into profits. And in today's world, cybersecurity is a huge deal. They acknowledge the risks of cyber attacks and data breaches, and mention their defense strategies like employee training and third-party oversight. They also note new technologies like AI could pose new challenges. Now let's zoom out a bit. NBT Bancorp's success is really tied to the local economies where they operate. Unlike giant national banks, they have a more concentrated footprint in places like upstate New York and northeastern Pennsylvania. So if those areas struggle, they feel it directly. Their biggest worry is interest rate fluctuations. Like most banks, their earnings really depend on the difference between what they earn on loans and what they pay on deposits. If interest rates change drastically, it can mess with their profits. A significant part of their lending is to businesses, especially commercial real estate. That is good for growth, but it also means they are more exposed to losses. If these businesses hit a rough patch, they keep a close eye on this. And like any big company, they are no strangers to legal matters. They mention ongoing legal proceedings that could potentially impact their finances. It is just part of the game when you are a major financial player. Shifting gears to how the stock market sees them, their stock performance graph shows how their stock did compared to the NASDAQ and a regional bank index over the last 5 years. NBT Bancorp has had its ups and downs, but generally trended upwards, outpacing the regional bank index toward the end of 2024 and 2025. It is a mixed bag, but shows resilience. Interestingly, they've been buying back their own stock. That means they think their shares are a good deal. And for the fourth quarter of 2025, they bought back quite a few shares, showing confidence in their own company valuation. And who is checking their homework? KPMG, the independent auditors, gave them a clean bill of health on their financial statements and internal controls. This is crucial for investor confidence. Digging into the financial statements, we see the huge effort that goes into calculating that allowance for credit losses. It is a complex process involving tons of data, economic forecasts, and expert judgment. They lean heavily on models to predict future losses, making it a really important area. The Evans acquisition also involved a deep dive into valuing the acquired loans. This involved looking at things like prepayment speeds, chance of default, and how much you'd lose if a borrower can't pay. These are all educated guesses, but vital for accurate accounting. Okay, let's wrap this up. NBT BANCORP Inc. is a growing company with a solid strategy. They've navigated a challenging economic landscape, successfully acquiring Evans. It was a smart move that expanded their reach, and their core banking business seems to be performing well. Their net interest income and margin improvements are particularly strong indicators of good management. However, they are not without risks, interest rate fluctuation, and the potential for loan defaults, especially given their commercial lending focus, are always on the radar, and operating a large financial institution means constant vigilance on cybersecurity and regulatory compliance. The fact they are already past that $10 billion asset threshold means more regulatory scrutiny is ahead overall. NBT BANCORP Inc. shows strength and a clear strategy for growth. However, investors should keep an eye on how they manage rising operating costs and the ever-present risks in the financial sector. What are your thoughts on NBT BANCORP's latest performance and their strategy for the future? Drop your opinions in the comments below. If you found this deep dive valuable, a like and subscribe really helps us keep these reports coming. And don't forget to join our Discord community, linked in the description, for more exclusive content. Thanks for watching, and see you next time on Corporate Decoder.